So our latest Housing Pulse report finds Australia's housing markets softening into year end and facing a more uncertain path ahead. When we look at prices, they're now dipping slightly in Melbourne and Sydney. Some of the heat's coming out of the mid-sized markets, Brisbane, Adelaide and Perth, starting to cool, although it's still strong in terms of growth. Turnovers flat or declining slightly in most markets, and we've seen auction clearance rates in Sydney and Melbourne also dip into year end. And I think where it's more uncertain now is that the prospect of RBA rate cuts have been pushed out. We now expect the beginning to an easing cycle to come through in May rather than February. So it looks like this softening that we've seen in the last few months is going to carry into the first half of next year. That said, there are clearer signs of the next leg to this cycle starting to form, particularly around consumer sentiment. So October, November, we saw a quickening or an improvement from very weak levels of consumer sentiment, with much of that keying off more promising signs around inflation and interest rate expectations. For the housing market, assessments of time to buy a dwelling finally lifted off very weak levels. It's still quite pessimistic and well below long-run averages, but the turning point looks to have passed. Also importantly, people are becoming more confident about jobs. So those two things, whether it's a good time to buy and unemployment expectations, tend to lead cycles in the housing market by a good 6 to 9 months. Now, it's still early days. And some of that improvement might have jumped the gun. Now that the RBA is not expected to really move on rates until mid next year, we may see sentiment sort of come off a bit. But we think this is the start of a turning point. As we get further into 2025 and that inflation piece starts to improve, we get some clearer signals from the RBA that rates are starting to move lower. That should provide some better impetus to the market, and we think an upturn will start to form in the housing markets over the second half of next year, and that'll gain momentum into 2026. That said, when it comes through, it still looks like it's going to be quite a constrained upturn. For the RBA, we think rates are only going to come down about a percentage point from peak to trough, and so we're not going to very stimulatory settings. At the same time, prices are at quite unaffordable levels, so there'll be quite a lot of constraint in the market as we enter this next cycle. But for now, it looks like we'll be in this sort of doldrums for a little while. A bit more of the heat will come out of the Brisbane, Adelaide and Perth markets before the recovery takes shape. There's a lot more in the report, obviously. There's variations state to state. Another important element is what we're seeing around population growth, expected to slow next year. And of course, in each market, we've got variations in supply conditions. In some markets, it's still extremely tight. And others, it's starting to slacken a little bit, and that's contributing to performances. We also have a deeper dive into some of the suburb performances in the major capital cities, with an eye to whether there's some bellwether suburbs that we should track more closely. And quite interestingly, there are often about a dozen suburbs that lead the cycles and prices across each of the capital cities. They're quite different city to city, but there is a clear lead-lag relationship. At the moment, it's very much confirming that softening signal that we're seeing in the headline numbers. So the momentum's definitely softening. It's a little bit more uncertain as we head into next year, like with everything at the moment. But that sentiment piece is showing some early signs of a sustained turn. And we think that'll carry the day. By the end of this time next year, we'll be into some sort of upturn. But price-wise, we'll be lifting to around 6% price growth across the major capitals rather than shooting the lights out. It's going to be a constrained upturn. As that forms in 2026 will be better, but it's going to be still quite a challenging market.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published or reproduced in whole or in part without the prior written permission of Westpac.